Okay, hello everyone. Maybe before I start, let me just give you just a very brief introduction in terms of peptides. And basically you have small molecules, biologics, and in the middle there was this very small segment called peptides. And for many, many years it was, again, small, growing mid-single digits with, I would say, very low visibility. And then there was all this development that shows that peptides were more stable, they were better drug carriers, and they had a very high safety profile. And there was more and more investment regarding peptide-based drugs, and then the whole metabolics revolution came. And most GLP-1s that you read or hear are actually peptide-based. And on the back of that, the peptide market is literally exploding. It's scaling up very rapidly in what is going to be one of the largest changes in the life science industry. So let me tell you how is PolyPeptide based, and then what is our recent performance. So basically, what makes PolyPeptide different is that it has 70 years of experience in peptides. It has deep peptide scientific expertise. It has a very strong track record. Over 1,000 peptides has actually been manufactured by PolyPeptide. Just to give you a sense in terms of how strong is PolyPeptide in development, if you look at all FDA-approved peptide drugs since 2021, 50% actually went through PolyPeptide. And we have this very rich pipeline. We have the richest pipeline in the market. There is no other peptide CDMO that is engaged in development as extensively as PolyPeptide. And then we have this multi-site network. Some of our competitors are either heavily based in the US or heavily based in Europe. We actually have a network across the US, Europe, and Asia. And given the high geopolitical concerns, this is actually quite an advantage. These were our results in 2025 in terms of why the PolyPeptide stock have not come down during the Iran crisis. It's true that we are one of the few that have not come down. It's mainly because of this. We posted 16% revenue growth at constant exchange rate, 84% profitability growth. Actually, we increased our profitability from an EBITDA margin of 7.5% in 2024 to 12% in 2025. And actually, in the second half of the year was already 19%. We posted a strong operating cash flow. We have significant customer funding to execute our capacity expansion, and that continued to materialize in 2025. And then we announced an expansion of our revolving credit facility. We basically have said that although we haven't come down during the Iran crisis, we consider the PolyPeptide stock to be significantly undervalued. And on the back of that, all of our capacity expansion is based on our own cash flow, based on the customer funding, and based on debt. We also share where we were in terms of our capacity expansion program. So the market is growing very rapidly. PolyPeptide is expanding their capacity. And we basically announced that we were not only on track, but actually the output of our new capacity is much larger than what we thought before. We did this large capacity expansion in Belgium. It was supposed to be 100 million in terms of expected revenues. Now it's going to be 125. And we issue a guidance. We basically say that our revenue growth will be between 20 to 25%. So an acceleration relative to the previous years. And then we said that our profitability will be mid to high teens, very much in line with our second half last year. And we basically said that we are on target to double our revenue relative to 2023. So these results just show the strong growth profile of the company in line again with the market. This just gives you a sense in terms of why the peptide market is so attractive. And what you have in the left-hand side is the growth of the global therapeutic market. So this will be our customer market. And basically in 2024, if you look at all the drug peptides, they were about 68 billion. And by 2031, it's expected to be 175 billion. Now, there is a lot of different ranges. There are ranges which are already above 200 billion. But where it is 200 or 175, this is a market growing very rapidly. And you can see the impact of metabolics, of GLP-1s, which are expected to grow at a compound rate of 15%. Now, outside of metabolics, there is significant innovation. There is a lot of innovation in oncology and cardiovascular and rare diseases. And that is also going to more than double over this period. So overall, a market growing very rapidly. And what you have on the right-hand side is the number of peptide drugs in clinical development. And you basically have over 500 peptide drugs already in clinical development. And you can see the participation by therapeutic area. And what is important is that although metabolics is driving the market, basically the peptide applications are going much broader than metabolics. Now, this just gives you a sense in terms of the rapid transformation of PolyPeptide. In 2021, when the company IPO, metabolic was about 20% of the revenues of the company. Back then, they had a large COVID business. If you look at 4 years later, of course, the COVID business went away. The underlying growth of the company is around 15%, with the metabolic business growing at a CAGR of over 30%. And today, metabolics account for over half of the revenues of the company and growing. Now, our exposure to metabolics is significant. We have 47 programs, 10 are commercial, 37 are in development. Of the 37, 17 are in phase 2 and phase 3. And all these metabolic revenues is across 25 customers. We have said that we work with 14 of the top 20 largest pharmaceutical companies, but not all the top 20 are engaged in peptides. So we basically work with nearly every pharmaceutical company. And we are working across not just the existing GLP-1s, but all the next generation, whether it is oral or agonists or combinations. The company is significantly exposed to this new market. And basically, our 3 largest sites, we have 6 sites, but the 3 biggest ones is the one in California, one in Brain, and one in Sweden. The 3 are engaged in the development and commercialization of metabolics. This just gives you a sense in terms of the financial evolution of PolyPeptide. And I think in the introduction, we talk about what happened since the IPO. PolyPeptide had one of the most successful IPOs, I think in 2021, when it IPO, the valuation significantly skyrocketed. A large part of the profitability, nearly 30% of the profitability of the group, was tied to COVID. So basically what happened from 2021 to 2023 is that the leadership team that was in place back then engaged in a very aggressive expansion as the COVID business was disappearing very rapidly. And that triggered a lot of volatility in terms of the performance of the company and a significant reduction in profitability. And you can see it here. In 2023, the revenues were 320 million, but it had an EBITDA margin of -2%. And in very simple terms, it had a cost infrastructure that could support a significantly higher revenue base than the one that it had. And basically, if you look at the revenues from 2023 to 2024 to 2025, you can see the acceleration on the growth, 5%, 15.6%, now a guidance of 20 to 25%, and an outlook that has been reconfirmed around doubling revenues by 2028. So overall, a very rapid acceleration of the company. And you can see how this rapid increase in revenues is rebuilding the profitability. We go from -2% to 7.5 to 12 to mid to high teens, and we expect by 2028 to be approaching 25%. Actually, if you look at the guidance that we have in 2026, already in the second half of 2026, we will be very close to the guidance. And we said at our earnings call that we have enough demand to hit the revenue guidance 1 year earlier. And then you can see the investments in CapEx. This is a high CapEx investment plan. What is important to know is that the company invested $250 million from 2023 to 2025, and it got $290 million in customer financing support. So actually, most of our capacity expansion at this point is being funded by large pharmaceutical players. So why do we invest in PolyPeptide? We are a leader in one of the most attractive CDMO markets. I think if you talk to any CDMO player, they will love to be in peptides today. We have a large and growing exposure to metabolics. There is no CDMO that has the level of breadth and pipeline than the one that we have in metabolics. The reason why we have such a large pipeline is because we have proprietary innovation and technology that allow us to do the development of very complex peptides. And that is a very important source of stickiness and differentiation. And we basically have this EBITDA pathway, mainly driven by top-line acceleration, that basically will translate into significant value for the company in the midterm. So those were the key messages